Luckin Coffee has more than 24,000 stores in Asia, most of them in mainland China. Now it's opened 2 shops in Manhattan, one in Greenwich Village and the other one in Chelsea.
I think it's kind of different versus Starbucks. There's more matcha option and more non-coffee options. Versus Starbucks is more like coffee-based.
Luckin's company plan to take over America. So basically Starbucks started coffee trend in China. Then lots of people started loving coffee. Then Luckin came out and Luckin is winning the battle in China. Now Luckin wants to come to America to fight Starbucks. So let's see how it is going. Could it take over America? Or could it lose to Starbucks in the US?
The drinks aren't just different. Think creamy matcha, coconut milk, and sweet foam toppings. More boba shop than traditional cafe.
Luckin Coffee has just opened up in New York, and we think that they're going to take America by storm.
Sean Ryan is a marketing expert and author of The Split, where he explains why Chinese consumers are turning away from Starbucks and toward Luckin.
Offering decent quality coffee products at 30 to 50% cheaper than Starbucks.
He says most customers use the Luckin app to order. That makes things quick, and it gives the company detailed data to guide what it puts on the menu next. Luckin has already become the fastest growing coffee chain in China, and a
Haha, so basically, all that said, Luckin is taking over America by storm. That's what he predicted. And because consumers changed their taste in China, so basically Luckin is winning. So basically Starbucks has a strategy. It's much more expensive, and Luckin has a order app. So Luckin really wants to get the customer order and stop by and pick it up and leave. But Starbucks have a different strategy. So what could it be? If you are interested in business, stock investing, American businesses and Chinese businesses and business all around the world, and how to invest in stock, subscribe to the channel.
Starbucks recently launched a new strategy. They're streamlining their menu, redesigning stores, and trying to get people to stay longer. Luckin, on the other hand, they're going in a different direction.
Luckin provides a decent cup of coffee. It's not luxurious. It's not high-end. If you're a coffee connoisseur, you're probably going to take a sip of their coffee and say, this is not a good cup of joe.
And at least for its first few customers in New York, that no-frills strategy seems to be working.
Yeah, so basically, Luckin wants to give more varieties. So they have different options. And much more than an average boba shop. Boba shops mean usually there's bubble teas invented by Taiwan in long time ago. Now lots of people love drinking bubble tea. So it has more options than average boba shops and also cheaper than Starbucks. But it's not as good as Starbucks, okay? Starbucks has a better coffee, much better coffee. So Starbucks has a strategy to keep the customer stay in the shop longer so that a customer order more. Maybe students, they are studying, or it could be dates, they order more items, cakes and desserts, and the more items means the more revenue. But Luckin on the other hand is different. Hey, they seem to know that space is limited. So you know what, get the customer in fast, get them out fast. So have them place on an app. So turnover, the higher turnover, our customer coming in and coming out, the more the revenue they will get. That's what they are betting on. And at least for the first few customers in New York City, they keep coming back. It's really important. When you are selling items like laptop or fridge, whatever, it's a bigger ticket items, they could last for a long time. You just buy an iPhone, it lasts. My iPhone has been My first iPhone has been around for like 4 or 5 years. I never have to fix them. It's still going well. So that's why I love to buy iPhones. It doesn't break down. Like Toyota, it doesn't break down. Once you buy a brand new Toyota, it could last a few 100,000 miles without any issues. So laptop, cars, refrigerators, it will be very hard to get customer repeat coming back again and again. Of course, you are based on the reputations. If the customer like Toyota, you know what? I've owned Toyota a long time, so it never gives me any problems. Their relatives, their friends gonna start buying Toyota. So it's a word of mouth, right? Hey, I love iPhone. So iPhone, it doesn't break down. It doesn't slow down that much. Yeah, it may have issue, but it's much better than other phones. You know what? Your friends, your family is gonna start buying iPhone. So everybody has iPhones. But coffee is different. Coffee, hey, you want repeat customer because it doesn't last long, right? You drink every day. One good thing is everybody drinks different types of coffee or beverages every day. They want to do that. So at least hey, you have different items on the menus, different varieties. You keep them coming back because it's a probably lower margin items than the cars, and so you need volume. So the more volume you can get, the faster it will be. The higher the revenue and the higher the profit. Really important.
To this one?
No, it's already second time I went because I really like it, so I came back.
In Chelsea, Duarte Geraldino, Fox 5 News.
So that's the first time. Second time she came back, so because she liked it. Hey, do you think Luckin is gonna win Starbucks in America? Or do you think Starbucks is gonna continue keep winning? So which company do you support? Luckin or Starbucks? So let's go and look at their stock price. As a stock investor, so you want to know which one that you should be investing or trading. Luckin year to date is up 39.45%, and 5 year, yeah, it's beat S&P 500, right? It beat S&P 500, it's going up Trump. But it has been around at least 10 years. No, not yet. It's since 2017 October. So not yet. So it doesn't meet my second criteria. The third criteria, has it been a public company for at least 5 years? Since 2019, yes. But then, do I like this business? I don't usually invest in restaurants or soft drink or coffee business because they are commodity, and also it's very hard to have a wide mode, right? People can switch one shop from another easily. It's not like they cannot live without, right? And they can always choose a different shops. So I'm not going to invest in restaurants and food industry. So no. So it doesn't meet two of my criteria. Does it meet SME? Does it meet financial statements? If you love this business, if you know inside out about Luckin company, like you are employee or you are manager of the company, then go for it, right? It's up to your decision. But it doesn't meet two of my criteria, so I'm not going to invest in Luckin. But would I trade options? That would be something to look at. Starbucks year to date up 3.01%, 5 year 28.02%. It doesn't meet S&P 500. And so basically, it meet three of my other criteria, maybe good financial statements, but it doesn't meet two of my criteria. It doesn't beat S&P 500, and also it's not a business that I like to invest in. It pays dividend. Yeah, Luckin doesn't pay dividend, 2.57%, but this is already big, $107 billion company. Okay, already big. It will be harder for them to become 200 billion, 300 billion because of competition. Luckin is only like 10 billion. Could they go 5 times from here? Yeah, absolutely, right? Because it's much easier to grow from 10 billion to 50 billion from than 100 billion to 200 billion, right? Because you're already big, so it's much harder to be bigger, and especially in competitive industry like coffee. And Luckin doesn't have any options to trade, so I will pass. But I don't want to tie up my capital in Luckin, and I will go past. And you don't have to do everything, right? You don't have to get all the companies to gain 50% return year to date within 6 months. And I only have, this is my new portfolio, I only have over 130,000, started from only a few 10,000. So why? So why should I keep chasing every company? You don't need to keep chasing every company. I only buy companies that meet 5 of my criteria, at least four, okay? Sometimes a company can go down and it may not be S&P 500 temporarily. So in that situation, I can ignore my number 1 criteria, as long as it meets 4 other criteria, okay? So it's really important, just invest in what you know, what you understand, invest in great companies with wide economic moats. That's very important. That means competitors cannot easily take over your business. So if you want to learn more, go to Master Risk Stock Option Crypto channel, subscribe, and go to playlist to learn more about stock investing, call option, put options, and advanced option. If you want to open an account, the link is going to be in the description comment down below, and you can also reach out to me as well. Share, subscribe. I will see you in the next video. Bye bye.